Tesla stock has recently surged over 35% following the news of Donald Trump's historic return to the presidency, being only the second president after Grover Cleveland to be re-elected after a gap term. Before jumping onto the hype train, let's take a step back and clearly analyze whether Tesla is a stock you should consider adding to your portfolio. Now, you might be wondering why Tesla stock reacted so strongly to Trump's victory. Well, a big part of this story involves Elon Musk's significant role in the 2024 election. Musk threw his considerable weight behind Trump's campaign, with some support suggesting Elon Musk's super PAC spent around $200 million to help elect Donald Trump, according to a person familiar with the group's spending, funding an effort that set a new standard for how billionaires can influence elections. Musk also leveraged his ownership of X, formerly Twitter, to amplify pro-Trump messages. He even showed up at key campaign rallies, including a crucial event in Pennsylvania. What's particularly interesting about Musk's involvement was his innovative approach to voter engagement. Through his America PAC, he launched a controversial $1 million daily giveaway initiative targeted at registered voters in swing states. While this approach raised some eyebrows and faced legal scrutiny, it demonstrated just how committed Musk was to influencing the election outcome. But here's the $1 million question. Should we let this political momentum drive our investment decisions, or should we be more strategic? While the excitement is tempting, smart investing requires us to look beyond the headlines and examine the technical aspects of Tesla's stock performance. Looking at the monthly chart, we can see clearly what the stock is doing and not what we think it may be doing based on media headlines. Tesla was trading inside what I call a nested consolidation, basically a consolidation within a larger consolidation that dates back to November 2021. The stock is bouncing between its all-time high of around $415 and the low of about $100, which is the larger consolidation. The 35% climb has taken Tesla above $300 and out of the smaller consolidation. It had been trading below $300 for over 2 years, so this move is significant as it could signal a move back to that $415 all-time high level, assuming we don't see a fake breakout, pulling us back below $300. The next major milestone would be breaking and closing above $415. That's when things could get really interesting, potentially opening the door to $500 and beyond. But remember, we need confirmation before making any moves. Now, let's talk about Tesla's track record. The company's shown it can deliver spectacular returns. We're talking about a 1,500% climb between 2019 and 2021. But here's the catch. Tesla stock is notoriously volatile. Day traders love it, which means we often see wild price swings that can trigger stop losses and shake out even the most committed investors. Recent history tells us just how challenging it's been to gain any real traction. The stock's been swinging up and down in consolidation, and personally, I'd love to see it settle into a more stable linear trend, similar to what we saw with Nvidia or Microsoft. Tesla's shares also stormed back to over that $1 trillion market cap level with Trump's win, last reaching this milestone back in 2021. But don't let Tesla's massive $1 trillion market cap fool you into thinking it's a guaranteed winner. Yes, it makes it the world's 8th most valuable company, but market cap is just one piece of the puzzle. Let's dive deeper into Tesla's fundamentals and future prospects. The company's third quarter 2024 results showed promising growth, with net income reaching $2.17 billion, up from $1.85 billion in the previous year. This financial strength demonstrates Tesla's ability to maintain profitability despite increasing competition and market challenges. Speaking of growth, Tesla's ambitious delivery targets deserve our attention. They're not just talking about modest increases. We're looking at plans to deliver an additional 500,000 electric cars next year. If they hit their target of 515,000 vehicles in Q4 2024, That will bring their total 2024 deliveries to about 1.8 million vehicles. That's significant scaling, and it shows confidence in their production capabilities. The Cybertruck launch in late 2023 marks another potential catalyst for growth. Initial deliveries have begun, and the Cyber Beast version of it is scheduled to hit the market by the end of 2024. But perhaps even more exciting is Tesla's vision for autonomous vehicles. Their planned Cybercab, targeted for 2027 with a $30,000 price tag, could revolutionize the transportation industry if they can deliver on their promises. Tesla's Master Plan Part 3 is another factor worth considering. This isn't just about making electric cars, it's a comprehensive strategy for transitioning into a sustainable global energy economy. They're thinking big, focusing on end-use electrification and sustainable electricity generation and storage. However, we need to address some serious challenges that could impact Tesla's performance. First, the competition in the EV market is getting fierce. Companies like BYD in China aren't just making competitive vehicles. They're offering them at a price point that could pressure Tesla's margins. This isn't just about making great cars anymore. It's about making them at prices that can capture market share while maintaining profitability. The regulatory environment presents another challenge, particularly regarding Tesla's autonomous driving technologies. Their autopilot and full self-driving systems have faced increased scrutiny, with various investigations and safety concerns potentially impacting consumer trust and deployment timelines. Production and supply chain issues continue to be a concern. While Tesla has made significant improvements in their production efficiency, they still face challenges in sourcing critical components like semiconductors and batteries. These constraints could affect their ability to meet ambitious delivery targets. The broader economic environment adds another layer of complexity. Interest rates, currency fluctuations, and raw material prices all impact Tesla's bottom line. Consumer spending patterns, especially in a potentially uncertain economic climate, could affect demand for premium EVs. And let's not forget about the leadership factor. Elon Musk's public statements and actions can significantly impact Tesla's stock volatility and public perception. While his vision and innovation have been crucial to Tesla's success, his controversial public persona can sometimes create additional market uncertainty. So what's the bottom line? While the post-election surge is exciting, your investment decisions should be based on thorough analysis, not political headlines. Wait for those key breakout levels to be confirmed, as we have seen with the $300 level, and make sure you're comfortable with and prepared for Tesla's volatility before taking a position. If you're considering an investment in Tesla, I recommend monitoring the key price levels we discussed earlier. With Tesla now above $300, the stock is offering its first entry point. You may enter now, but do be aware of a fake breakout, which is when Tesla looks like it wants to move up but reverses back below $300. Being eager regularly catches people out. How do you reduce the chances of getting caught in a fake breakout? It's actually quite simple. Wait for Tesla to pull back to touch $300. At this point, it will either break below $300 and move back into consolidation, or it will bounce off $300 and break out above the current high of the trend. As Tesla had been below $300 and in a sideways market for over 2 years, I'd personally wait for the pullback and the next breakout, as a fake breakout is a very real possibility. Getting in now also leaves the very real scenario of another potential trend failure or stuck in the larger consolidation if Tesla fails to move through $415 and instead remains below it. The momentum could be given back to the bears, which could see the stock drop back below $300 or lower. However, if it does break and close above $415, I'd apply the same logic to an entry as that at above $300, which is a move above $415, a pullback to touch $415, and then a bounce and a breakout to new all-time highs. This is the next entry. So as tempting as it may be to take a position on Tesla, it comes with risk of fake breakouts. And so patience must be applied to wait for the right entry points that stack the odds of success in your favor. Palantir's stock has recently achieved new record highs and without a fake breakout. It recently broke out of its 4-year consolidation and also broke above the significant $50 mark. If you're considering adding this AI stock to your portfolio, watch this video to learn more before it potentially hits the next milestone.